I'm Philipp Bagus and I'm Professor of Economics at Rey Juan Carlos University.
How would you characterize the current banking system?
The current banking system is one of the main problems that we have today in our civilization, because it's a fractional reserve banking system that leads to recurrent cycles of boom and bust, allows for a redistribution of wealth on a massive scale, and leads to many problems.
What are those problems?
Well, the problems are, as I said, boom-bust cycles, then unemployment as a consequence. There's a redistribution of resources going on, a distortion of prices, and we get into a system where interest rates are artificially low and people have an incentive to indebt themselves, and we get to an over-indebted society. And the consequences of an over-indebted society are very important. It's short-sightedness and not the long-term view, but indebt yourself. There are asset price bubbles as a consequence, and if you're almost forced to indebt yourself to keep track with everyone else, because if the others indebt themselves with money created out of thin air and you don't, you will never buy a house, you will never buy an apartment. So the incentive is to indebt yourself, and when people are indebted, they are less independent. They have to focus more on money stuff, because they have to serve their debts. Only without debts you're really independent. So you can go on sabbaticals, you can have more time for activities that don't produce you money. But if you are indebted very high, then you have to look to earn the money to serve your debts, and you become dependent on your creditors. And all this is related to the fractional reserve banking system that allows the expansion of debt to such an extent. Otherwise, debts would be limited to the real savings in the economy. One can see, I think, a general degeneration of moral standards. I think this can be observed, but there are of course other factors influencing politics, the size of the state, but also the monetary system, I think, has an influence here.
Can you describe how the current banking system works?
Yeah, the current banking system is a fractional reserve banking system, which means that when banks have reserves, they create monetary substitutes on top of it. So they create money on top. They issue more money substitutes than they have money itself. For example, today money itself would be, for example, cash and reserves at the central bank, and they create bank money out of thin air and lend it out, reducing artificially the interest rates. And the result is then that only a small part of the bank money, what you see on your bank account when you open your online bank, only a small part is actually backed by money proper, that is by cash and central bank reserves.
And would you characterize it? What's wrong or problematic with that from an economic point of view and a legal point of view?
Yeah, from a legal point of view, it's problematic because banks take the money, the reserves that belong to the people, and lend it out to others. They give a loan to someone, they create new money substitutes, new bank deposits, and give it to someone else. And the problematic is that we want to have our money available. Only when we have our money available, it reduces the uncertainty of the world. In a world without money, uncertainty would be much higher, and we hold money because we don't know what will happen, and therefore we need money available. But when banks create money substitutes out of thin air, then someone else gets availability at the same time. I think I still have the availability and act upon that, and someone else also gets availability on the same money. So we both subjectively believe that we have the money available, but it's not. There are more money titles titles to money, then there's money itself, money proper. So from a legal point of view, it's a misappropriation of the money that I have deposited in the bank. The bank uses it for its purposes to lend it out to someone else, thereby creating more money titles than there's money proper. And from an economic point of view, the result is, it would be not so bad if they would create money titles and buy some consumer goods, then only the price of these consumer goods would be distorted, but they actually create these money titles, this bank money, and introduce it into the loan market, thereby influencing the price of the loan market, the interest rate, below the level that it would have in a free market, a level that represents the amount of real savings in society. And in society, there are only so many projects that you can complete successfully with the available real savings. And the interest rate on the free market indicates to entrepreneurs how many projects can be undertaken successfully with the available real savings or real resources. And when people save more, the interest rate falls and more projects, investment projects, can be undertaken. The problem comes when the interest rate does fall, not because people save more and there are more resources available, but when the interest rate falls because new money is injected into the loan market. The banks create new money and inject it into the loan market. There's no additional resaving. There are no additional real resources available for new projects to sustain people working there. So then there's an artificial lowering of the interest rates, and more projects appear to be profitable than actually are profitable with the available savings, with the available resources. And there's an over and malinvestment of these resources. More projects are started than can be completed with the resources, and we get to a bust, and bust into a recession where the structure of production must be realigned with consumer preferences, which means, well, much suffering for people who lose their jobs, projects that cannot be completed, resources that are wasted, time that is wasted, and much suffering that for humanity.
And how does this create like a wealth distribution?
How does it create a wealth redistribution? Well, it's always, when new money is created, the first who receive the new money profit on cost of those who get the new money later. Why? Because the new money is injected and someone spends it. What is the result? Well, prices rise relatively. They are higher than they otherwise would have been. And there are others in the economy that see the prices are rising, but the new money hasn't reached them. Yeah, so they see that energy costs are increasing, gas prices, everything, food prices, everything is getting more expensive, but the income is not. On the other hand, there's the first receivers who get more money before prices rise. Yeah, they get the new money first and then they spend it and make prices rise. So there's a redistribution in favor of those who get the new money first, to the detriment of those who get it last. So always, and when banks create new money, it's the same. And here we have actually a redistribution that goes from the poor to the rich, because who gets bank loans? Well, someone who has assets, yeah, who's rich. If you're living below a bridge, you probably won't get a loan from a bank, so you will not be a first receiver of new money. But if you are super rich, George Soros, you will get easily a loan from your bank, and you will be a first receiver of the new money. You buy more assets, more stocks, more houses, and you can pledge them as collateral for even more loans. And this explains why the gap between, or is one of the factors why the gap between the rich and the poor has widened since the end of Bretton Woods.
And then how would you fix this problem? Or what reform do you think would fix this?
Well, a full reserve money, like a full reserve gold standard, a 100% gold standard, because this forbid money to create more titles to money, to gold, than they exist. And gold has the advantage that it has been the money of the past, so we would reconnect to a competitive process that we have seen before, and money cannot be manipulated at the will of the government, while paper can, or digital numbers can be manipulated by the central bank, but gold not. Yeah? And then you had a full gold standard, which means that banks are not allowed to create new money injected into the loan market. we should have a monetary system that respects and honors traditional property rights and legal rules. Yeah? And with a full reserve standard, this would be the case, because banks would not be allowed to take the deposits of the depositors and lend them out to someone else. Yeah? So they would comply with the traditional legal rules, which is a deposit is a deposit, and the depository has to hold 100% reserves for it, to have it available at all time to the depositor. Yeah? So from a legal point of view, this would be a return to private property rights and an end of the privilege that banks enjoy, and they enjoy it only, or governments have given them these privileges to use the money of the depositors, because banks in return finance governments. So they got the privilege to create money, and a part of this newly created money they lend out, they finance governments, and therefore governments looked the other way and did not enforce property rights.
And what transition plan would you recommend to get from here to there?
There are several transition plans to go to this to a full reserve banking system, a full gold standard. For instance, in the Austrian school, there have been several proposals. There have been by Rothbard, Mises, Huerta Soto is the most elaborated. I proposed another one which is more drastic. The ones of Huerta Soto, for instance, it maintains the existing banking system and gives first the central bank prints money and buys the assets of the banks, thereby backing 100% the demand deposit with money, and then exchange it into gold or back it by gold, so you get a 100% reserve gold standard. Yeah, and the funds that are liberated then can be also exchanged from depositors, because when the central bank buys all the assets of the banks, this gets into a fund, and depositors can exchange what they have now into participations in the fund, and what they don't use, this will be used to cancel government debts. So it's a sophisticated reform that in several stages gets you to a full 100% gold standard. I've taken a more radical view, and I have titled the article Monetary Reform, the Case for Button Pushing, because I say this actually would be a last bailout of the banks. Yeah, and the banks have violated private property rights in the past, so they should be accountable for it. All government intervention should be abolished, the central bank should be abolished, and then banks should be made responsible for the credit expansion, that is the creation of more titles of money that they have than they exist. And this, if you do these two things, then of course the banking system, there would be panic, the banking system would collapse, and then there would be a new competitive process where most likely also gold would be evolve again as a new money. Maybe there's a role for cryptocurrencies, I don't know, but there would be, at least if the government gets out of the monetary system, there would be freedom and free competition, and probably quite quickly a new money would emerge. I mean, in the hyperinflation of Germany in 1923, when people abandoned the Reichsmark, quickly gold and foreign currencies evolved as new currencies. So it was a question of weeks that there will be new monies. And if the government stays out of the process and property rights are enforced, that they are 100% reserves, there will be very quickly a stable and sound and very good monetary system that gets rid of the problems that we suffer today.
Okay, great. So I think I'll just show you some of these things and just get your...
Now,
Okay.
in all our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash. And there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
If the central banks introduce CBDC and have it programmable, i.e., restricting what can be purchased with it, is that still within the definition of money as we know it?
Well, it would be the commonly accepted medium of exchange if it's imposed like this. But of course, it would be a very totalitarian measure, yeah, because you could control every spending, and you could restrict spending for certain people who maybe do not have the social scores or do not comply with some stuff the government wants, and they could cut you totally off of all. Yeah, you could control by this people perfectly. One result, of course, would be that it works like a tax increase, because all black markets and tax evasion would be gone. So it's like, yeah, government wants to increase taxes, so we do CBDC.
Yeah. I guess if we have the definition as store of value, that's under threat because you don't know what they're going to program tomorrow, right? What is it, 4 definitions of money, right?
Well, they say it's a store of value, medium of exchange, and unit of account. Yeah.
If the central banks could program the money, how would that conflict with the definitions of money?
If central banks could program money in such a way, it would make money less quality, because this would easily, I mean, it could just be programmed that it loses as a store of value, that it automatically gets destroyed or loses value, like the Schwundgeld, and it could be the size where you could use the money could be programmed to be restricted. So many of the important qualities of a good money could be changed like this, yeah, by programming it, by government decree. Behind all these ideas to program money is the idea to central plan the economy, the idea that the government has to intervene more efficiently because market participants do not do something voluntarily. Yeah. So of course you could then just freeze money of people so they could not spend anymore, driving down inflation rate. You can introduce the Schwundgeld, that money loses value, making people to spend their money instead of hoarding it. You could also, these Keynesian ideas that you have to lower interest rates to spend, so that aggregate demand increases, gets boosts, and they always thought that, well, we cannot do negative interest rates too much, because otherwise we will have bank runs. But once you have digital currencies, you cannot escape. Yeah? There can be no bank runs that people get cash out of the bank, and therefore you can lower interest rates minus 10%, minus 20%. Yeah, this is the Schwundgeld, that it loses value.
What is Schwundgeld?
Schwundgeld is the idea of Silvio Gesell, which inspired Keynes also, or Keynes said, well, it's actually good. He had good ideas, this guy. And Schwundgeld is that the money is programmed. Yeah, it was less sophisticated in the past, but now it can actually be done more sophisticatedly with the central bank digital currency, to program that it loses, let's say, 10% value every year. Yeah. So instead of 100 euros at the end of the year, you have only 90, for instance, about 90. So this means that you rather spend it, because if you don't spend it, you will have only 90. So it's not that that people will, like now, since the Great Recession, hoards have increased, that people did not spend, so money balances increased. So they lowered the interest rate, but aggregate spending, or what they consider as aggregate spending, did not increase, but much was hoarded. It stayed on the central bank account balance or banks. if you introduce central bank digital currencies and negative interest rates, this to a sufficient extent, then people will start spending it, and aggregate spending gets up and gets the economy rolling. That is what the Keynesians want. So all these this possibility of central bank digital currencies and the possibility to program it is like the central planner in the monetary system gets new instruments, and he thinks it's necessary because he thinks he's doing a good thing. But it's economically it's not a good thing, because central planning does not work. There's not enough information, and morally and ethically, of course, it's an evil thing, because it takes liberty away of people.
But I guess if you could have a digital technocracy, then do you think communism could work then, or?
No, it just gives them more instruments to manipulate, but still they don't have the knowledge. They might have new instruments to take liberties away of people, but the fundamental knowledge of what is the right amount, what is the correct interest rate, what would be the interest rate be in the free market, they never know. They can never know.
I guess it depends on their goal, huh? The objective, if it's just killing people.
yeah. They will be more effective in controlling people. That's for sure. There's always creativity, and also that can surprise, and also criminal creativity, and the state people, bureaucrats, coming up with new ideas, creative ideas how to control the economy and increase their power, is also sometimes surprising. You don't expect it, but they do it also.